Welcome back to Dinar Shift. What you are about to hear represents a significant moment for observers of specific global currencies, particularly the Iraqi Dinar and the Vietnamese Dong. At this very moment, trading activity for these currencies is appearing on multiple professional trading screens, an event that is generating considerable discussion across foreign exchange desks and online forums. The reaction is swift and filled with inquiries. For anyone holding these currencies or monitoring the markets for indications of a potential shift, the following information will detail what is currently occurring, explain its relevance, outline prudent actions and pitfalls to avoid, and suggest how one might prepare. We will clarify the underlying market mechanics in straightforward terms, suggest practical steps for holders to consider, highlight specific misinformation and fraudulent schemes that must be disregarded, and provide clear guidance on documentation and verification processes. It is important to stay informed, as we will also touch upon how institutional traders are responding, what potential market fluctuations might follow, and how these developments could influence future currency exchange procedures through official channels. Our approach will remain simple, direct, and focused on factual developments. Let us begin. To start, it is essential to understand what the term live trading activity signifies on a foreign exchange platform. When a currency pair is active on a major platform, it means that real-time price quotes, including bid and ask spreads along with trading volumes, are being displayed on the terminals used by traders worldwide. These platforms provide continuously updating charts and order books. For the Iraqi Dinar and Vietnamese Dong to appear in such a live feed indicates that data streams are delivering numerical information that traders and financial institutions can observe, and in some cases, limited trades may be executed against these quoted prices. This visibility is a notable development because it transforms theoretical discussion into observable market data. This activity, however, does not inherently mean that every commercial bank worldwide has suddenly begun offering retail exchange services for these currencies. Rather, it signifies that components of the financial infrastructure, such as price feeds, valuation mechanisms, and systematic testing, are being actively engaged by market participants. Traders utilize this data to inform positions, manage risks, and adjust their financial models. Therefore, when you observe these currencies on live charts, consider it analogous to the market illuminating a monitoring panel, allowing participants to watch developments as they unfold in real time. The reaction from traders to a newly active or reactivated currency feed often results in initial market volatility. This matters to currency holders for a specific reason. When a currency appears on trading screens, both automated trading systems and human traders begin to interact with it. They may place small orders to test market depth, gauge liquidity, and observe how larger orders might influence the price. This exploratory activity can lead to price swings, because the initial volume of buy and sell orders may be limited. There may not yet be substantial liquidity on either side of the market. For individuals holding physical currency, this on-screen volatility should not be mistaken for an immediate opportunity to convert paper notes at those fluctuating intraday prices. It does, however, suggest that market participants are actively assessing and pricing the currency, and that technical systems are undergoing the necessary work that typically precedes any broader official exchange offering. Consequently, the noticeable reaction, comprised of sudden price movements and heightened excitement, can be viewed as a signal that market testing and focused attention are actively underway. A crucial distinction must be made between a currency being live on Forex platforms and the establishment of an official public exchange mechanism for retail holders. Trading platforms can display live quotes and may even facilitate limited trading volumes between institutional counterparties for purposes such as hedging or speculation. An official retail exchange, in contrast, implies that banks, operating under central bank directives and within formal networks, are prepared to accept physical notes from the public and deposit equivalent values into bank accounts. The former is primarily a market visibility event. The latter is a legal and operational activation. One can think of this visibility as an initial phase within a multi-stage process. The activation of price feeds and trading screens reports market activity. Subsequently, clearing and settlement systems are tested. Banks then finalize their internal verification rules, and regulatory approvals are secured. Each of these steps requires time and involves various entities. Therefore, if you are in possession of physical notes, this period should be used for preparation, organizing documents, confirming identification and proof of ownership, and avoiding the assumption that you can walk into any bank immediately to exchange large quantities without prior notice or additional verification steps for holders of physical Iraqi Dinar or Vietnamese Dong. A practical and focused checklist is advisable. First, ensure your notes are stored securely, such as in a locked safe or a bank safety deposit box if available. Second, organize all proof of ownership documentation. This includes receipts from the original acquisition of the currency, photographs of the bundles if you have, any records of serial number, RS, and bank statements that document past transactions involving these currencies. Third, verify that your personal identification documents are current, such as a government-issued ID, passport, and details of your bank accounts. Fourth, exercise caution regarding social media activity. Avoid posting identifiable photographs of your currency holdings, as this can attract fraudulent attention. If you choose to contact your bank, do so only through officially verified channels, not via social media comments or messages, and inquire about their formal procedures for exchanging exotic currencies should an official program be announced. These steps do not guarantee immediate access to exchange networks, but they can help minimize future delays and protect against common pitfalls that rise during periods of sudden market movement. At this juncture, it is critical to address the types of scams that typically proliferate when news of this nature circulates. Fraudulent operators often offer priority processing, exclusive exchange rates, or early access to exchange networks in return for upfront fees or instructions to ship currency to unfamiliar addresses. None of these offers are illegitimate. Reputable banks do not request advance fees to exchange currency, nor do they instruct clients to send large amounts of currency to unverified processing centers without a formal contractual framework and clear legal guidelines. Be wary of any online post promising guaranteed revaluation rates or assured returns. Another common scam involves fake verification services, where third-party websites promise to expedite your currency exchange for a fee. Any service that requires payment before any formal confirmation from a bank should be considered a significant red flag. The safest course of action is always to await official bank procedures and utilize only licensed financial institutions. If uncertain, contact your bank using its verified phone number or consult the official channels of the relevant central bank rather than relying on claims made on social media. Regarding the verification process, banks will likely employ when any official exchange begins. Expect standard identity checks coupled with proof of legitimate acquisition. This typically entails presenting a government ID, recent utility or bank statements that match your name, and documentation showing how and when you obtained the currency. For larger volumes, banks often request additional documentation such as notarized affidavits, transaction histories, or a source of funds declaration. Banks are also required to conduct anti-money laundering, AML, and Know Your Customer (KYC) checks. Having organized records can significantly speed up processing and reduce the likelihood of delays for compliance reasons. If your bank already offers international currency services, initiating a confidential conversation now to understand their specific document requirements can be prudent. However, reiterating a critical point, do not send your physical notes to anyone unless you receive clear written instructions to do so from your bank through a verified and official channel. Let us now shift perspective to consider the market reaction from the viewpoint of traders and financial institutions. When live data for these currencies appears, entities such as hedge funds, proprietary trading desks, and banks begin scanning for opportunities related to arbitrage, hedging, and position sizing. They may initiate small trades to test liquidity, and this activity can manifest as spikes in trading volume or sudden price movements. Institutional players will also be monitoring for regulatory announcements and central bank communications that could alter the short-term market narrative. For retail traders, these early stages may present trading opportunities but also carry elevated risk, as spreads can be wide and the process of price discovery is ongoing. If you are not an experienced Forex trader, this is not an advisable time to take large speculative positions based solely on social media excitement. For institutions, the existence of live data feeds allows for the initial integration of these currencies into risk models, but full market integration requires deeper liquidity and more established settlement mechanisms. For the smaller holder, perhaps someone with a few thousand units of local currency, the options are more straightforward but still important. First, avoid panic. Market buzz does not alter the physical and legal steps required to exchange currency in most jurisdictions. Second, Prepare a clear set of documents and identify trusted banks in your country that operate foreign exchange services. Third, practice patience and seek official guidance before considering transferring notes to intermediaries or engaging with third-party services. Fourth, maintain a healthy skepticism toward any private buyer offering to purchase your notes at a premium, as this is a common framing for scams or gray market deals. For many small holders, the most straightforward outcome will involve an established bank network facilitating the exchange in a regulated manner once formed. All announcements are made. This process, however, requires compliance and time. Having your paperwork in order positions you for more efficient processing when official systems open. It is natural at this point to address common emotional reactions, such as anxiety and hope. Both are understandable, particularly for individuals who have held these currencies for an extended period. Sudden market activity can make long-held possibilities feel immediately tangible. However, emotional decisions, like rushing to sell to the first cash buyer or paying a third party to expedite an exchange, often lead to costly mistakes. The most constructive action you can take now is to proceed with calm, practical steps, secure your notes, organize your documents, and consult verified banking channels. If the situation feels overwhelming, consider speaking with a trusted financial advisor or a bank officer. Do not allow social media hype to drive you toward risky choices. Remember that any legitimate exchange process will necessitate proper legal documentation and verified banking procedures. This is where patience and thorough preparation will prove most valuable. To briefly explore the technical side, let us simplify how Forex platforms actually display a currency like the Iraqi Dinar or Vietnamese Dong. These platforms pull price feeds from liquidity providers and brokers who post bid and ask prices. Charts are then generated from these feeds displaying ticks, candlestick patterns, and trade volumes. When a currency is newly active or has limited liquidity, the price feed may rely on SMA. Number of providers. This can cause prices to move more sharply on relatively low trading volumes, a condition traders refer to as thin liquidity. As liquidity deepens, meaning more providers post prices and more counterparties are willing to trade, the market tends to stabilize and the difference between bid and ask prices narrows. This evolution is typical during early integration phases for a currency. The key takeaway for holders is this: early price movements on trading charts are part of a market discovery process and do not instantly translate to guaranteed bank-offered exchange rates for retail accounts. For journalists and content creators covering this story, accuracy and restraint are paramount. It is crucial not to chase engagement with sensational claims that banks have officially opened exchange programs without an official statement to that effect. Reporting should focus on what is verifiable: the presence of live feeds on charts, statements from regulated financial institutions, and any communications from the respective central banks. Avoid amplifying unverified claims from anonymous sources. If covering stories from currency holders, emphasize practical advice and verify. Steps over promises. Responsible reporting helps protect individuals from scams and can mitigate market panic, which in turn supports a smoother integration process for all parties involved. Considering potential timelines reveals why they can vary so widely. Price feeds may appear relatively quickly, but the availability of formal retail exchange services depends on a coordinated sequence of These include central bank policy announcements, updates to bank operating systems, international settlement arrangements, and the establishment of legal documentation frameworks. Some steps could progress rapidly if institutions are prepared, while others may require weeks or months if additional compliance or infrastructural work is needed. There is no universal timetable, as each count. and banking network operates under its own procedures. Therefore, while live screens constitute an important milestone, they do not automatically trigger widespread retail exchange. The most prudent plan is to prepare now while expecting the official process to follow public, verifiable announcements from authoritative bodies. Record keeping is a fundamental aspect of preparation that can streamline any future application process. Create a dedicated folder, both digital and physical, containing scanned copies of your identification, proof of purchase or acquisition for the currency, your bank account information, and any prior correspondence with banks or currency exchanges. If the currency was part of a family inheritance, include relevant legal documents supporting that claim. If hazed abroad, retain receipts and transaction confirmations. Organize any records of serial numbers or photographs of the notes. Keep all originals secure but accessible for verification when required. A well-organized presentation of documentation can significantly expedite legitimate verification and reduce delays caused by missing paperwork. If you are contemplating selling or transferring notes to a private buyer, it is advisable to exercise extreme caution. Private buyers often promote convenience and speed, but may operate in a gray market that offers little legal protection. Transactions conducted outside regulated banking channels frequently lack formal dispute resolution mechanisms and legal recourse if problems arise. In many instances, banks may later refuse to accept notes that have passed through questionable chains of custody. If your objective is a legal and secure conversion, the recommended path is to wait for authorized channels and follow official bank instructions. If a private sale is absolutely necessary, consult with a financial or legal professional beforehand, insist on a written contract, and verify the legitimacy of the funds. However, it is important to acknowledge that private deals inherently carry higher risk. Behind the scenes, when a currency re-enters live data feeds, developers and financial technology providers are engaged in testing routing, settlement, and reconciliation systems. This involves running simulated transactions, ensuring payment networks can handle the currency, and confirming that clearinghouses can process cross-border settlements. These technical steps, while largely invisible to holders, are crucial for preventing processing errors once official exchanges commence. Successful testing reduces the likelihood of future issues such as misapplied funds or settlement delays. From a holder's perspective, these tests are a positive indicator that underlying systems are being examined, but they are distinct from a bank opening a retail exchange counter for the public. Addressing frequently asked questions can provide further clarity. One common question is whether notes can be exchanged immediately. The answer is typically no. One should await official bank guidance. Another question involves shipping notes to a processing center. The clear advice is to never send notes to anyone unless explicitly instructed to do so in writing by a verified bank. Individuals also wonder if the rate shown on a trading chart will be the rate they receive. Market quotes are indicative. Retail exchange rates may differ due to fees and officially set rates. Regarding official rate announcements, these will come from central banks or authorized financial institutions, and those are the rates that should be relied upon. Keeping answers factual and directing people to verified sources is essential. For holders with substantial quantities of currency, there are additional considerations and steps. Large transactions naturally attract more regulatory scrutiny for anti-money laundering and compliance purposes. Expect banks to request detailed provenance documentation, tax records, and potentially notarized affidavits. It is wise to work privately with a trusted bank officer and consider consult a lawyer specializing in international finance when dealing with significant sums. Avoid publicizing large holdings online, as high visibility can attract fraudulent schemes. Legitimate exchanges of large volumes usually involve careful coordination over an extended period, not hasty transactions completed in hours. Considering broader market sentiment, continued live activity for these NCIs could have several implications. First, it may increase confidence in the currency's management if central banks follow with clear communication, potentially leading to greater liquidity and more robust exchange networks over time. Second, it can attract speculative interest, which may increase short-term volatility. Third, international businesses operating in or with Iraq and Vietnam might begin to incorporate these currencies more formally into contracts and hedging strategies, which could improve commercial flows in the medium term. Each of these potential outcomes, however, depends on careful policy implementation, transparent communication, and robust banking infrastructure, none of which are established. Overnight, a practical note on tracking news: rely primarily on official central bank channels and announcements from major regulated financial platforms for confirmation. While social media and various online channels can provide alerts, they often intermix fact with speculation. If a major bank or a central bank posts an announcement, treat that information as authoritative. For all other RTS, treat them as leads requiring verification. This disciplined approach helps prevent emotionally driven decisions and keeps the focus on the steps that truly matter: documentation, secure storage, and engagement with verified banking institutions. Developing a plan for possible outcomes can be helpful. Consider a tiered approach. Tier 1 involves basic readiness, securing your notes and scanning essential documents. Tier 2 involves engagement readiness, contacting a trusted bank and preparing notarized documentation if necessary. Tier 3, relevant for large holders, involves more comprehensive readiness, such as securing legal counsel, detailing full provenance, and coordinating with private banking services. This structured approach helps prioritize actions based on the volume of currency held and allows for a measured response, preventing one from feeling overwhelmed and ensuring the ability to act efficiently when official processes begin. To conclude, here is a final practical checklist for consideration. First, physical. Secure your currency notes. Second, scan your identification and all proof of acquisition documents. Third, if possible, photograph your notes and log their serial numbers. Fourth, identify one or two credible banks with international operations that you can contact. Fifth, avoid private sales or third-party services promising accelerated exchange. Sixth, refrain from posting public photographs of your currency holdings. Seventh, prepare to present your organized documentation when official channels eventually open. Keep this checklist accessible and update it as you receive new, verified information. In closing, the current moment, observing the Iraqi Dinar and Vietnamese Dong on live trading screens, constitutes a notable market milestone that warrants careful attention. It signals a degree of market recognition and indicates that technical readiness is being assessed. It is not, however, an automatic trigger for immediate retail exchange. Holders are well advised to transition from a posture of waiting to one of practical preparation, securing notes, documenting ownership, contacting verified banks, and maintaining a vigilant stance against scams. Traders and institutions will continue to probe and price these currencies as part of normal market function. For holders, the most effective strategy will likely combine patience with thorough preparation. We encourage you to focus on verifiable information and prudent steps as this situation continues to develop.